Millions of Social Security payments for May 2026 have been approved and processed by the SSA, and a documented portion of those payments will not arrive on time or will not arrive at all, for reasons that have nothing to do with the calendar and everything to do with specific conditions on individual accounts. This is not about a government shutdown. It is not speculation. The Social Security Administration's own guidelines, confirmed in SSA publication number 0510031, and federal regulations under 20 CFR Part 404 and Part 416, identify a precise set of circumstances that place an approved payment in a held or suspended state without any automatic notification to the beneficiary. If you receive Social Security retirement benefits, SSI or SSDI, the next several minutes may tell you exactly why your May deposit has not arrived and what to do about it before the window to act closes. I am and I have tracked SSA payment policy, federal benefit regulations, and Medicare rule changes for years. Everything in this report is sourced directly from ssa.gov. The Code of Federal Regulations Title 20, SSA publication number 0510031, and the official 2026 payment schedule published by the Social Security Administration. No opinion, no rumor. Stay through the end, because there is one element connecting a held Social Security payment directly to your IRS tax filing status, and it is the piece that almost no coverage of this topic has addressed. The SSA does not call you when your payment is held. They do not send a real-time alert when your account triggers a review. And YouTube does not surface this video again when the next payment cycle is affected. Subscribe now and turn on the bell 2 seconds, and let me walk you through exactly what is on the SSA's list that stops an approved payment from reaching your account. Here is the documented background you need to understand before we go through the specific list. The Social Security Administration distributes payments to more than 70 million Americans each month, a system that processes an extraordinary volume of transactions on a fixed schedule that has been in place in its current birthday-based form since 1997. May payments follow 4 distinct dates: May 1st for SSI recipients and those who began receiving benefits before May 1997, May 13th for those with birthdays between the 1st and the 10th, May 20th for birthdays between the 11th and the 20th, and May 27th for birthdays between the 21st and the 31st. In May 2026 specifically, the calendar alignment pushes all Wednesday-based payments later than in most prior months. The first Wednesday payment does not occur until May 13th. According to analysis published by Capital Skyline on April 27, 2026, this means that beneficiaries in the earliest birth date group, the 1st through the 10th, may experience a noticeably longer gap between their April payment and their May payment. That extended gap is not an error. It is a structural feature of the 2026 calendar. But for millions of households operating on tight monthly budgets, even a predictable delay creates real financial pressure. The more serious issue, however, is not the calendar gap. According to federal regulations under 20 CFR Part 404, Subpart M, and 20 CFR Part 416 Subpart M, the sections of federal law governing benefit suspension and termination, the SSA maintains a specific list of conditions that can place an approved payment in a held status. These conditions apply to retirement benefits, SSDI, and SSI, and they are distinct for each program. What all of them have in common is this: the SSA does not send a real-time phone call or text message when any of these conditions triggers a payment hold on your account. You may receive a written notice, but only after the hold has already been applied. And with SSA staffing reduced by approximately 7,500 positions since January 2025, according to Office of Personnel Management data, the processing time for those notices has lengthened considerably. The list of conditions that can hold an approved payment is not a secret. It is published in federal regulation, but it is written in language that most beneficiaries will never read. Here is where it gets specific, and this is the part that most coverage has gotten wrong. The first thing you need to understand is the earnings test, the most common reason a Social Security retirement payment is approved but reduced or fully withheld, with no individual warning issued in advance. According to ssa.gov, and confirmed by reporting from multiple financial news sources through early 2026, if you are receiving Social Security retirement benefits and you are under your full retirement age, which is 67 for anyone born in 1960 or later, the SSA applies what is called the Retirement Earnings Test. In 2026, the annual earnings threshold is $24,480 for beneficiaries under full retirement age for the full calendar year. If your income from work exceeds that amount, the SSA withholds $1 in benefits for every $2 earned above the limit. In the calendar year you reach full retirement age, the threshold rises to $65,160, and the reduction drops to $1 withheld for every $3 earned above that amount. The SSA monitors W-2 and self-employment data to apply these withholdings, and in some cases, applies a full payment suspension when records show current work activity that is expected to trigger excess withholdings for the year. If you claimed Social Security retirement benefits before reaching full retirement age and have since returned to work, check your earnings carefully against the $24,480 limit. If you have exceeded it, your May payment may be reduced or withheld, and the SSA will not call to tell you before it happens. But that is only the first item on the list. The second condition affects a much larger group and is far less understood. The second element is the recertification and redetermination hold, and it is the one that catches the most beneficiaries completely off guard. According to the Code of Federal Regulations, Title 20, Part 416, Subpart M, the SSA is required to periodically review the continuing eligibility of SSI recipients. This process is called a redetermination. During a redetermination, the SSA sends a written request, either by mail or through the My Social Security online portal, asking the beneficiary to confirm information about income, living arrangements, and resources. According to SSA guidelines published at ssa.gov, failure to respond to a redetermination request within the required window can result in an immediate suspension of SSI payments, even if nothing about the beneficiary's eligibility has actually changed. The payment is approved in the system, the beneficiary is still eligible, but the hold is applied because the response was not received. Under Federal Regulation 20 CFR Section 416, once a suspension is in place for this reason, it can extend for up to 12 consecutive months before the SSA moves to formal termination. If your SSI payment for May has not arrived, log into the My Social Security portal at ssa.gov and check the message center for any unread redetermination requests before taking any other action. People who work with benefits counselors and elder law attorneys already know about redetermination holds. Their advisors check the message center on behalf of clients every quarter. Most SSI recipients on fixed incomes never look at their online portal until a payment is missing, and by then the response window may already have closed. Third, and this is the one that surprises even long-term beneficiaries, is the continuing disability review hold that can affect SSDI recipients without any advance notice that the review has been initiated. According to Federal Regulation 20 CFR Section 404.1596, the SSA is required to periodically conduct continuing disability reviews known as CDRs to verify that SSDI recipients continue to meet the medical definition of disability. When a CDR is initiated, the SSA sends a written request for information. If the beneficiary does not respond or does not submit the requested medical documentation within the specified period, the SSA can suspend benefit payments, even if the beneficiary's medical condition has not changed. According to the regulation, suspension becomes effective in the month the SSA determines the beneficiary has failed to comply without good cause. After 12 consecutive months of suspension for non-compliance with a CDR request, benefits can be formally terminated under federal law. If you receive SSDI and your May payment has not arrived, check your mail and your My Social Security message center immediately for any CDR-related correspondence before the response deadline passes. The fourth condition on the list applies specifically to direct deposit and account information, and it is the most preventable of all the holds. According to Kiplinger's guidance on Social Security payment delays in SSA, Gov Direct Deposit Policy, if a payment is sent electronically to a bank account that has been closed, frozen, or updated with incorrect routing information, the payment is returned to the SSA. Once a payment is returned, the SSA does not automatically reissue it on the next business day. It enters a reprocessing queue. With the SSA operating at reduced staffing levels, the reprocessing timeline in 2026 has extended beyond what beneficiaries may have experienced in prior years. If you changed bank accounts at any point in the past 60 days and did not update your direct deposit information at SSA, Gov at least 30 days before your May payment date, your deposit may have been sent to the wrong account and returned to the SSA. This applies equally to retirement, SSDI, and SSI payments. Now here is the element I teased at the beginning, the connection between a held Social Security payment and a completely different federal agency. When the SSA holds or reduces a Social Security retirement or SSDI payment because of the earnings test, it creates a documented record of withheld benefit amounts. Under IRS rules confirmed in IRS Publication 915, Social Security benefits and equivalent railroad retirement benefits, the withheld amounts are not counted as income for the year in which they are withheld, but they are credited back to the beneficiary as a higher monthly benefit after full retirement age is reached. Here's what most coverage misses. The IRS requires that you report the total Social Security benefits you were entitled to receive, not just what you actually received when calculating, whether your benefits are taxable under the provisional income test. If your annual notice from the SSA shows a different amount than what was actually deposited in your account due to withholding, and you file your tax return using only your bank deposits rather than the SSA reported figure, you may underreport your Social Security income, which can generate a discrepancy notice from the IRS. The correct figures are on your SSA form, SSA 1099, which is available through your My Social Security account at ssa.gov, and that is the number the IRS expects to see on your tax return, regardless of how much was actually deposited. Consider someone like Beverly, a 64-year-old retired warehouse supervisor in Kentucky who claimed Social Security retirement benefits at age 62 and recently returned to part-time work at a garden supply store. In early 2026, her annual earnings crossed $26,000, roughly $1,500 above the $24,480 earnings threshold. The SSA, which received her employer's wage report electronically, applied the earnings test to her account in April and suspended her May retirement payment without issuing a phone notification. Beverly checked her bank account on May 13th and found nothing. She waited 3 business days as the SSA advises. Still nothing. The representative confirmed the suspension was related to the earnings test and that her payment had been withheld, not lost. Beverly's benefits were not terminated, but she lost a full month of income she had budgeted for before anyone explained to her what had happened. Beverly did not do anything illegal. She simply earned $125 more per month than the SSA's 2026 threshold allows before full retirement age. Step 1. Log into your My Social Security account at SSA.gov right now and open the Message Center. Check for any unread termination requests, CDR notices, or earnings test notifications. If you see a message with a response deadline, act on it immediately. The SSA counts the deadline from the date of the notice, not the date you read it. Your account for any open requests or holds before your next payment date. Step 2. Verify your direct deposit information at ssa.gov under the My Profile section. Confirm that the routing number and account number on file match your current active bank account exactly. If you changed accounts recently and the information has not been updated, submit the correction online, and be aware that the change requires up to 30 days to process, meaning your May payment may require a manual reissue. If your May payment was returned to the SSA, ask the representative to initiate a reissue and confirm the expected timeline. Step 3. Pull your Form SSA 1099 from your My Social Security account at ssa.gov and compare the total benefit amount shown there against what was actually deposited in your account for 2025. If those numbers differ because of an earnings test withholding or a payment hold, make sure your tax preparer uses the SSA 1099 figure, not your bank statements, when filing your federal return. Share this step with any family member who is receiving Social Security and working part-time, because the earnings test applies to anyone under full retirement age, and most people in that situation have never been clearly told how the withholding works. One firm warning before I close. With payment delays in the news, scammers are specifically calling seniors and claiming their Social Security account has been flagged, suspended, or frozen, and that immediate payment is required to restore access. The SSA will never call you demanding payment to release a held benefit. They will never ask for gift cards, wire transfers, cryptocurrency, or your banking information over the phone. They will never threaten arrest or benefit termination in a recorded message. If you receive any communication like that, hang up immediately. What we covered today is documented in federal regulation, confirmed by SSA policy, and already affecting beneficiary accounts across the country this May. The earnings test, the retermination hold, the continuing disability review suspension, and the direct deposit return process are 4 distinct and documented reasons a payment can be approved by the SSA and still fail to arrive in your account without a phone call, without a text, and often without a letter until days or weeks after the hold has been applied. Most Americans receiving Social Security, SSI, or SSDI have never seen these conditions explained in plain language. You now have the complete list before the next payment cycle begins. Before the end of 2026, the SSA is expected to publish updated guidance on redetermination processing times and CDR scheduling. I will cover that the moment it is confirmed. Subscribe and turn on notifications so that report reaches you before your account is affected. Keeping your benefits protected and your payments on time is exactly why this channel exists. Take care of yourself.